All right, folks, buckle up because today we're talking about the outcasts, 3 mega caps that everyone thinks they understand, but oh boy, the market has no idea what's coming. Apple, Tesla, Amazon, 3 giants, 3 totally different trajectories, and 3 very different risk-reward profiles. And yes, I've got favorites. Let's hit it hard, fast, and loud. Apple, the unbreakable stalwart. Apple, the company everyone loves to call boring. But boring? Boring? No, Apple is a Procter Gamble with $1 trillion ecosystem strapped to its back. This is the ultimate stalwart, the reliable cash flow machine. I'm not going anywhere mega cap. And here's the kicker. Apple doesn't need to reinvent the wheel. It doesn't need to be an AI arms race champion. It just needs to be doing exactly what it's doing, and it's doing it very well. Services, the crown jewel, are growing like a weed in spring. The App Store, iCloud, Apple Care, subscriptions, payments. This is recurring revenue with margins that make accountants weep with joy. And while everyone else is lighting billions on fire chasing AI moonshots, Apple is doing something smarter. They're using AI quietly, strategically, to keep the ecosystem sticky, premium, and indispensable. Not flashy, not loud, just effective. And let's talk valuation. People scream, Apple is expensive. But compared to what? This isn't a hyper-growth story anymore. It's a premium consumer staple. But tech margins. The multiple isn't crazy when you realize the market is finally pricing Apple like the reliable, durable, fortress-level earnings machine that it is. And the buybacks? Oh, the buybacks are never stopping. Apple prints cash like it's a hobby. They reduce the float like it's a sport. And long-term shareholders, they get rewarded every single year. Apple is the rock, the anchor, the mega cap that doesn't need to surprise you. It just needs to keep being Apple. Now let's talk about the wild card, the adrenaline stock, the hold your breath and pray ticker, Tesla. Look, I've owned it before. I respect the company. I respect the mission. If anyone could pull off the impossible, it's Elon. But let's be real. The risk reward here is rough. The valuation, PE's stretched, price to earnings growth is stretched. Market cap is enormous relative to current earnings. And future earnings? Speculative, very speculative. Let's hit the big bets. Robotics, the humanoid dream. Tesla wants to build a general purpose robot. Cool idea. Futuristic, sci-fi. But here's the problem. Robotics is already here. And it's specialized. Surgical robots, warehouse robots, manufacturing robots. These are machines built for specific tasks with precision and reliability. A humanoid robot? That's a different beast. It needs to replace a human, not a task. It needs to do everything from opening doors to packing boxes to resetting equipment. In personal use, who's going to pay tens of thousands of dollars for a dishwasher or a robot to open a dog door? Could it replace a data center attendant? Maybe. Could it replace a team of packers with one human supervising? Possibly. These are niche, long cycle, high capex, low margin, slow adoption markets. Not the kind of thing that justifies $1 trillion valuation. Robotaxis, the holy grail. Tesla's margins would explode if robotaxis worked at scale, but here's the reality. Waymo was already doing these rides. Tesla is behind on implementation, and even if Tesla took over all of Uber's business, for example, the entire thing, it still wouldn't justify today's multiple. Do you know how large Uber's market cap is? And trucking. People think trucking is easy. It's not. Alternate warehouse addresses, address changes, liftgate requirements, damaged loads, mid-route rerouting, agricultural returns. Logistics is a battlefield of exceptions. Tesla would need deep partnerships with logistics teams who live and breathe this stuff. Margins? Better than human drivers, sure, but still low and honestly still far away. Now let's look at the EV sales. Increasing competition everywhere. Margins tightening. Bottom line on Tesla, not looking great. Amazing company, legendary CEO, huge potential, but the valuation demands perfection across multiple industries that honestly don't even fully exist yet. I need to see at least one of these bets work, just one, before getting interested again. Now let's move on to Amazon, a sleeping giant ready to wake up. And this is the mega cap that's been asleep at the wheel for 5 years, underperforming, ignored, forgotten. But under the hood, this thing is a coiled spring in our opinion. AWS, the quiet monster. AWS is the backbone of the internet. Still growing, still printing cash, still the leader in enterprise cloud. And AI workloads, they're coming. They're sticky, they're high margin. To advertising, the rocket booster of Amazon. Amazon ads are a beast, high margin, growing fast, and every Prime member is a captive audience. Robotics, the margin enhancer. Amazon doesn't need humanoid robots, they need efficiency. And they're already deploying robots at scale to reduce costs, speed up fulfillment, and expand margins. Valuation, more expensive than Apple, yeah. More growth potential than Apple, hell yeah. And higher risk, high reward, absolutely. But Amazon is the comeback story, the underdog mega cap. This one with multiple levers to pull and a long runway ahead, in my opinion. So here's the breakdown. Apple, the stalwart, the fortress, the reliable giant. Tesla, the visionary moonshot with a valuation that demands miracles. Amazon, underperforming mega cap with real catalysts and real upside potential. Three outcasts, three different futures, three different levels of conviction. And for me, Amazon first, Apple second, Tesla way down on the list, but one of those big bets lands and we're back in, baby. That's the show. Thank you for watching.